What is up, you guys? Nick here. NIO back in the green, NIO back on the road to 100. Why is NIO trading up? Should you buy? Analysts are upgrading NIO heading into NIO Day 2020, slated for January 9th, 2021. To say the electric vehicle stock market has been volatile for the past few weeks would be a vast understatement. With the big three emerging Chinese electric vehicle companies, Xpeng, Li Auto, and NIO, more closely mimicking each other these past few weeks, I want to talk about which ones stand to gain the most and which ones you should reconsider. Focusing on NIO first. Investors aren't sure of whether to buy, sell, or hold and are going insane from what I can see online. We as investors should be looking for the long-term prospects of this company, not the short-term. Yes, NIO has incredible potential, but much of this potential will not be realized until 2022 and beyond. With the advancement of NIO Day just around the corner, in this video, I want to talk about whether investors should purchase before, what will likely happen on the day of, what will NIO's regulatory credits do for their bottom line, and why analysts are upgrading the stock as of recently. I will also be talking about Xpeng and Li. I want to talk about why I think there is an imminent coming surge in terms of share price. We have a lot to get to in this video, but first, Weeble has improved their promo. They are now offering 4 free stocks worth up to $3,700. All you have to do is 1. Sign up, 2. Open an account, and 3. Deposit in at least $100 using the link in my description. This is such a no-brainer, guys. Bottom line, you're getting at least a 20% ROI. That's pretty incredible. Absolute no-brainer. Weeble offers some of the best analytics in the game. I wouldn't promote a company I didn't love and personally use myself. This promo ends soon, don't sleep on it. If you haven't yet, hit the subscribe button. I do a ton of videos like this covering EV, tech, and IPOs. I focus my investment strategy on disruptor companies, and I would really appreciate it. While you're at it down there clicking things, decimate the like button. And without further ado, let's get right into it. Alright, so NIO is currently hovering around the mid-40s and actually has been for quite some time now. After the massive run-up we saw a few months ago, this was more than to be expected. Lots of investors have been buying at the top of this curve and are now contemplating bailing out at a loss, and I cannot stress enough that, in my opinion, and this is just my opinion, that would be a huge mistake long-term. This company is so young and in an industry where breaking out is incredibly difficult. When investing in an automotive company, you should go in aware of this likely volatility. Stonks, unfortunately, do not only go up. So what are we hearing from analysts? Well, a very prominent analyst by the name of Kevin Lau has recently initiated on NIO with a buy rating and a $59 price target. The current big 3 emerging Chinese EV companies are NIO, Xpeng, and Li. And Kevin Lau is favoring NIO by massive margins when compared against the others. He has broken down their fundamentals and believes the value of NIO at current market prices are the most enticing between the 3. Now, he does indeed believe it may be time for investors to consider taking profits for Xpeng and Li. However, I would consider this only if you were focused on selling the highs and buying the dips. However, if you are solely focused on long-term profits, as I am currently holding on Xpeng and Li both. Lau has initiated a hold rating and a $33 price target for Li Auto and a sell rating and a $32 price target on Xpeng. Now, I'm not sure I completely agree on his analysis on Xpeng. I'm not sure he is fully factoring in their vertical integration, their increasing deliveries month after month, and their continued expansion and plans to build another factory. There is widespread consensus that Xpeng is currently leading the race in terms of autonomous driving and implementing L4 driverless technology or mind-off tech within mass-produced cars. This would be a vast feat for the company and would likely bring in a lot of interest and publicity with it. In terms of Li Auto, Lau sees their extended battery range as a driving force for the company and a factor that will sway consumers to purchase Li instead of companies with lesser NEDC ranges. Mileage anxiety is indeed cited as the leading cause of consumers favoring gas and diesel over battery. However, NIO and Xpeng currently have batteries that should not be dismissed whatsoever. There is speculation on whether NIO will unveil their 150 kilowatt-hour battery cell at their upcoming NIO Day event. I do believe this would blow investors away and likely inject some health and value into their shares. Xpeng did receive a much higher run-up than other competitors, and I think this was due to their vertical integration and strong sales of their P7 sedan. However, they are currently trading at 18 times price to sales, while NIO's price to sales is around 14 and Li is only around 12. However, in my opinion, NIO is a better investment currently than Lee. Let me know in the comments what you think between these three companies. I'm curious as heck. Moving into NIO Day, I think a surge in share price is likely. We are already seeing the beginnings of this. We are seeing the recovery. We are seeing that upwards trajectory. With the release of a sedan on the roster, possible news of a minivan, another SUV, potentially a 150 kilowatt hour battery, expansion plans into Copenhagen, Denmark, other markets in Europe, and insight into their eventual North American expansion, this would undoubtedly be huge for the company. Sometimes in the market, you have to zone out all the other noise and strictly focus on the long-term prospects of the company at large. NIO's long-term prospects look so bright in my opinion, and brighter than the other two competitors. They really are just getting started. I do indeed have concerns of another share dilution coming sooner rather than later, and I will be releasing my thoughts on this video in a few days, so make sure you subscribe. You don't want to miss that update. I think moving into the end of the year and the run-up into NIO Day, a price target hovering around $60 is not out of the question. Remember, NIO's regulatory credits come into play next year. This will help out their bottom line immensely. I think this lull in share price and stagnation was more than predictable, as this typically occurs after a fast run-up like we saw in November. Investors aren't sure of whether to take profits for the short term or invest in the long term, or try to buy the dips, and we are seeing this confusion reflected in their shares. This is nothing out of the ordinary. I do think Xpeng's shares are mimicking NIO's more closely than Lee's are, and I do think moving into the coming quarters, we will see Xpeng and NIO move further ahead of Lee, stretch this margin more. However, this could open up an enticing buying window of Lee shares next year for long-term investors. This company is by no means out of the race, but simply in third position in my opinion in terms of emerging EV Chinese companies. These early Chinese EV companies are so well positioned to dominate the coming landscape, and by no means is micro-diversifying between them all a poor idea. The new energy vehicle sales, or NEV, of Chinese EV is expected to increase from its estimated current 9% market in 2020 to an incredible 32% in 2021. I do not think 100% share price gains for all of these companies is out of the realm of possibilities moving throughout 2021. I really do not, and I do think this will happen. Analysts are predicting that with Tesla's continued domination of the industry at large, that they will likely push out companies on the lower end. This is where they are especially taking control of the market, and especially in China. This puts immense pressures on automotive companies focusing on the lower end of the market, the lower bracket. This is where Xpeng unfortunately is. They will have a dogfight with Tesla in the coming years, mark my words. However, this is where I think NIO is somewhat at an advantage. They're shielded. I think they will be able to cut into Tesla's market more than Tesla will be able to cut into NIO's. NIO, being exclusively a luxury brand, brings with it a whole ton of brand equity. With no ongoing intentions to move away from this niche, they will continue to benefit from this. Along with better margins on every single sale and continued brand recognition and growth, I think they will be able to cut into consumers who are interested in luxury EVs, have the capital to spend, but have been defaulting to Tesla just because they are really a monopoly at this point. People want new things. People will want NIOs. They are expanding at an incredible rate. I really do see huge things for this company. NIO Day will bring with it a surging share price, and with the regulatory credits rolled out next year, this will help their bottom line, give them a bit of extra padding. They are indeed my pick between these three companies. Anyways, everyone, let me know in the comments what you think. I really want to open up a discussion. Let's get some good things going here. Thank you so much for watching. Thank you for the continued support. I really do appreciate it. Hit the subscribe button if you haven't already. Do not forget about the Weeble promo, 4 free stocks worth up to $3,700. This is a no-brainer. Anyways, I will see you guys all in the next video. Hit the subscribe button if you haven't already.